Hello, investors and traders. Welcome back to the Trend Trader channel. Today, I would like us to touch on a couple of things. One of them is dividend investing, and then I would like to just give you a brief overview of an event that I attended recently. So, for some of you may know or may not know, so there is a stockbroker called IG. So IG is a European company. I think it's a UK company, but there is a Johannesburg office. So when I refer to IG, I will be talking about IG South Africa, not the European office. So last week, I attended an IG event. It was an insightful event, thanks to IG and everybody that was there who shared their information. But I will come back to IG. First thing first, I want us to talk about dividend investing again and some of the pitfalls that happens with dividend investing. We know that the SVB Bank in the US, it had some issues. People started wanting to withdraw money. The share price of the company started to fall. Some other banks in the US were affected. Here in South Africa, we've got a couple of stocks that are moving downwards really fast, not necessarily related to SVB or in the banking sector. But I think that the SVB issue is just spreading to other parts of the world, and some of the JC stocks are affected as well. So, with regards to dividend investing, remember whenever you buy a company for dividend purposes, it's better to look for a company, a good quality company in terms of the business, because at the end of the day, the company need to continue to do a great business to generate those after-tax profit so that they can pay you as a dividend investor. Without after-tax profit, there are no dividends that you're going to get from that particular company. And another thing that you need to keep in mind as a dividend investor is the share price of that particular company. So the assumption is that before you buy that company, because effectively you are buying an asset that is going to generate you a future cash flow. That, remember, you've already paid a 20% dividend withholding tax. So the money that is deposited into your brokerage account, you can reinvest it, buy the shares from the same company that paid you the dividend, or you can buy other companies, or you can withdraw that money because you've already paid tax to it. But remember, the investment community, they always encourage investors to reinvest those dividends so that they can increase their holdings from those companies that pay them those dividends, right? So now when the company pays you that dividend, remember it needs to be a good quality business. So when you invest in a particular company, you need to look for information and ensure that you are making an informed decision. One of the better approach, especially with value investing, is finding an asset that is trading at a discount. So previously, we mentioned that the dividend yield is a function of price. It keeps on fluctuating with the share price of that particular stock. But if you look at the value or the net asset value or the intrinsic value of the business, that does not change so fast because the existing buildings, they're still going to be there. The company goodwill can change over time, but it's not something that changes overnight. Remember, when we talk about things that are sort of value, we are talking about property, plant, and equipment. So those are some of the fixed assets that don't just change easily. So that is why it is important that before you invest in a particular company, you do your numbers so that you are satisfied that the asset that you are buying, at least you are buying it cheap, so that at least at some point it will rise, the share price will rise to reach the fair price. That will give you capital appreciation. But while we are waiting for the price to rise to reach the fair price, at least you should be receiving the dividends. So now the problem starts when you've done your calculations, you are satisfied that you bought the company, then the share price, it starts tanking. Then what do you do then as a dividend investor? With everything that we do in life, we need to understand the advantages and disadvantages of that particular thing. So one of the disadvantages of dividend investing is that some people, they will tell you that you need to focus primarily on the dividend income that you are receiving from the company. But we are human beings, we've got emotions. The share price, they start tanking, we start to feel otherwise. So you need to prepare yourself. How are you going to react in a situation whereby the share price of your asset starts to drop? The company can continue to pay you dividends, but how are you going to react when the share price starts to drop? Obviously, for some people, it's a painful situation or a painful thing to experience. Other people see it as an opportunity to buy more shares of that particular company. It doesn't matter which decision you take, you need to ensure that you are satisfied with that decision, and you should be able to handle it emotionally. So once again, we saw companies like Transaction Capital, a company that has paid dividends in the past. They are in a taxi business. They bought we sell cars, and they have other businesses. Today they released a report. The numbers, according to analysts, and what the interpretation of those of that report is that the SA taxi business was not doing well. As a result, the company was going to report a decline in earnings. The share price got hammered. The share price it went down. At some point it was 16 rand per share, from just somewhere around 28 rand, 24 rand per share. At some point it was down a negative 32%. So as an investor, how are you feeling about that kind of a situation whereby you hold a position and then in just one day the value is down by negative 30%? These are some of the things that you will get to experience as an investor. It's not just all rosy that every day you wake up, you go and pick some money in the market. There are a lot of things that can happen. So it's not just a transaction capital. There are other companies that had similar experiences. It may not necessarily be negative 30%. We saw MultiChoice. It also fell. At some point, it was down by negative 12%. But MultiChoice is another company that also pays dividends. So now investors will have to make up their mind if at this moment buying transaction capital or MultiChoice, is it a good decision? But specifically with a transaction capital, we saw that the business, it talks about challenges, and we don't know how long those challenges are going to last. Remember, the management can still pull some strings to try and turn around the situation. But the question is how long it is going to take that turnaround to happen, and what happens to the share price, to the profitability of the business, and the dividends that you can expect to receive from the particular company. So with that said, these are just some of the things that you need to pay attention to. So if you look at transaction capital by the close of business day today, the dividend yield of transaction capital and MultiChoice will have dropped a bit. MultiChoice is not much of a big deal because at this moment it is back at the price where it was trading before the announcement that they were going to do some streaming service or streaming agreement with a US company. So there was that a nice reaction. The share price went up, but now the share price has crashed. It has come back to that level just before that announcement. So my view is that MultiChoice, it's not much of a big deal, but it depends on where you bought. If you bought after the news came out, you could potentially be underwater. So that's it with regards to dividend investing, transaction capital, and MultiChoice. Then now coming back to talk about the IG event, one thing or one talk that was interesting to me, besides Ross talk, because Ross was talking from the perspective of a trader. Remember, IG is in a contract for derivatives or CFDs. You can trade forex, commodities, indices, futures, and this is not a video that endorses IG. I'm just talking about an experience that I had there. So Christia van Herden, for those people that are familiar with Just One Lab, she's one of the presenters or the host in Just One Lab. So she was one of the speakers at the IG event. One thing that she touched on was be a good loser. So, well, that kind of statement was received in different ways by the participants or the people that attended the event. But she was just talking about be a good loser in the context of risk management. I mentioned that some transaction capital and MultiChoice, the share price are tanking, and the other companies, the share price are tanking. In our YouTube channel, whenever we buy stocks, we remember our approach is using technical analysis, and it's a trading approach, but we are investing. That is how we invest using technical analysis and trading. And for the people that think that you can't trade stocks using ISO equities, I don't know where they get that incorrect information, because ISO equities is just a broker. You at the other side, you can decide what to do on your own account, right? So what does it mean to be a good loser? In my view, when you talk about risk management, it is important that you determine the amount of money that you are willing to lose before you take a position. You need to make peace with that amount of money, because it can happen that you lose that money. There is no guarantee that every investment that you make in the market is going to be successful. So now, for you to become a good loser, it is important that you first determine the amount of money that you are willing to lose. Because if there is a certain amount of money that you are willing to lose, then you are a willing loser. So now you just have to wait for the trade outcome to determine whether that position is a loser or that position is a winner. And also remember that the outcome of a trade, it's not a reflection of you as a person. Just because you are willing to lose money, it doesn't make you a loser in life. Maybe that is why some people, they are not comfortable with accepting that their analysis was proven wrong by the market, and then they hold on to their losses, which leads to the losses becoming larger. You shouldn't associate the trade outcome with you as a person. The market is just doing its own thing. You are still a winner in many other aspects of life, even though you might have the losses that are following each other. You see, now the English bundles are running out. But yeah, if you have losses that are just, they keep on coming, a string of losses, it doesn't necessarily mean that you are a loser. It could be that the market at that particular time is not suitable for your approach. Remember, there are people that are buying shares, there are people that are selling shares or selling short. So maybe the market is suitable for short sellers at that particular time. If you are a trend follower, maybe the market is not trending. If you are trading support and resistance, maybe the market is not trading in a range. So it is not a reflection of you as a person. Remember, I said that you need to be comfortable with losing. So the only way for you to be comfortable with losing, it means that you need to estimate the amount of money that you can lose. So in our 10,000 Rand stock trading challenge, we are willing to lose 2% of our capital. So that is 200 Rand per position that we are willing to lose. So whenever we take a position, we set a tight, not necessarily a tight stop loss, we set a stop loss that will make us to lose no more than 200 Rand in that particular position. When the stop loss is hit, we lose that 200 Rand. We are willing to lose that 200 Rand. So that makes us willing losers or good losers, as the way that Christia put it. But for you to become a willing loser or yeah, a good loser, you need to have a discipline. Because if you don't set the stop loss without that discipline, then your losses, they can easily become larger as you, from time to time, you refuse to cut your loss. So you need to have that discipline. And it's not just a discipline of setting a stop loss. Whenever you craft a trading strategy, you come up with ideas what the stock has to do in order for you to buy, or what the stock has to do in order for you to sell. Once you've crafted all those rules, you need to follow those rules. So you need the discipline for you to be able to follow those rules. So discipline is important whenever you are trading or investing, and it is a key component of making you a good loser. We have already touched on emotions when we're talking about transaction capital and multi-choice. But when we talk about emotions, from time to time, emotions will always try to overpower you. It's not just about in a losing scenario. Also in a winning scenario, you buy shares in a particular company, the share price go up because you didn't plan when you're going to exit that position. Now you're not sure whether you should take a 10% profit, 20% profit, or you should wait for the share price to double. If it doubles, do you take the profit, or maybe do you want that position to become a multi-bagger? So those are some of the things that you need to pay attention to, that from time to time the emotions will take over, and once the emotions take over, you are less likely to make rational decisions. That is when you start to become irrational. And most of the time, the reason why you start to become irrational is because you don't have a plan from the beginning. So it is important that you have a plan from the beginning. And then she also, I think it was still Krista, she made a nice presentation where she was showing different kinds of traders. The traders had different win rates, and also the size of wins versus the size of losses. Remember, in one of the videos where we were giving you an update on our stock trading challenge, we mentioned that even though our win rate is high, our expected is starting to turn negative because the average wins are smaller than the average losses. So you can see that the use of expectancy, we don't claim to own it. It is not unique to us. It is something that we learned in the market. It is something that is out there. It exists. If you are using IG as a broker, automatically it calculates expectancy for you. We're not using IG for trading that 10,000 trading strategy or trading challenge. So we need to record our trades manually and calculate that expectancy. So expectancy, it is a big thing. Other people, they call expectancy an edge. And a simple definition of an edge is that it's a probability of one thing happening over another. So you want the probability of you making money to be greater than the probability of you losing money. So when we speak about expectancy, we prefer to have a positive expectancy. That simply tells us that from time to time we expect to make money from the market. If we have a negative expectancy, then automatically that tells us that we should expect to lose money in the market, and that is not nice. Nobody wants to lose money in the market. Then she also touched on the system. In this case, when we talk about a system, we're not talking about a fancy computer algorithm or software or whatever. We're simply talking about a set of rules. Whether you are a trader or an investor, you do need to come up with rules. Just to make a simple example, if you are a value investor, you'll probably be looking for those companies that are selling far less. The current share price should be way up. Should be way low below the fair value or the intrinsic value of a company. So that is a rule that you are setting out. It's part of the system that you are building. Maybe you say you are interested in a particular sector or industry. Maybe you want to invest in telecoms. So there is no point for you looking at shares that are outside telecoms when your intention is to find shares in telecoms. If you want shares in miners, commodity miners, you're going to zoom in those commodity miners. So everything that you describe before going to all the JSE shares, you already have a set of rules of what you are going to look for. So that is you building that system. So now once we have the set of rules, the component of the system, it's the set of rules, what you're going to do in the market, how are you going to handle those positions. Then at the top there you put discipline, because discipline, it comes with emotional intelligence, if I can put it like that. Yeah. For you to be able to follow your plan with discipline, you need to be emotionally matured. For you to be able to take your losses or to take your profit as and when your system dictates, that require that you have a certain degree of emotional intelligence. So yeah, those are some of the things that I found interesting in that IG. Ross, again, like I said, he shared a lot of things that I resonate with, because he was touching more on the trading side of this thing. We got a book. I will read the book and do a book review on what Ross shared there. So that is that thing that is needed. People that needs to understand. And then somebody there in the audience asked that sometimes they will be in a position, that position will be losing. Then now they don't know when to exit that position. Remember, once you have a set of rules, in those set of rules, you need to have an exit rules as well. Without exit rules, it will become a problem. And also it is important that you need to understand that when you are trading, you are focusing on the process. You need to consistently improve the process. The outcome is win or loss. That is reflected in your profit and loss statement. But the process, finding those companies that you think are going to perform well, or the companies that you think are going to pay you dividends, that is all in the process. So that is where you should be most invested in. But sometimes some people, they're invested in the outcome of the thing, whether did I make money in the position or did I lose money in that position. And one of the dangers, if you don't have a proper system or you lack the emotional intelligence to follow your plan accordingly, is that you can do something that is outside your trading plan, and then you make money, and then you realize that what's the point of being disciplined, because you can easily just go off ramp from your plan and still make money. But how many times can you do that? So you see that it is not something that is more likely to be repeatable or reproducible. So you need to try to find those things that are repeatable and reproducible, so that at the end of the day you can have a bit of a longevity in the market, because it's also about that. Then there was an interesting talk by a lecturer from UCT. She was touching on behavioral finance. You see, in our YouTube channel, we always talk about trading, investing. We don't really talk about behavioral finance or something like financial literacy, but that is something that is always need to be there at the back of your mind, because how are you going to fund your trading or investing account if you don't manage your finances well? You still need to ensure that your expenses are less than your net income, so that you can have money. Yes, other people, investing forms part of their expenses, or they want to invest or save first and then save whatever that remains. For all those things to happen, you need to ensure that your expenses are a fraction of your net income. Then you can have money to fund all these accounts, whether it's trading or investing. So it is part of behavioral finance. The ability to sit in a losing position if the stop loss hasn't been triggered, it's part of behavioral finance. When you see people just quickly exiting a winning position, maybe the position was in some red for quite some time. Now they just want for that position to be at break even. As soon as it turns green, they just want to cut their losses and exit that position. All those things are part of behavioral finances. So in a nutshell, the IG event was great. I enjoyed it. We got a nice notebooks. We got a book from Ross, and if from time to time you see different broker, sometimes you don't even need to be a client of that specific broker, because they might have seminars, webinars. For you to grow as a trader or an investor, you also need real life experiences of other market participants, because maybe reading a book might not give you that real life experience. But if you talk to somebody who's doing this thing, then you get to understand that people do lose money, people do make money. It's, yeah, a lot of things can happen in the stock market. Maybe you need a bit of a support group in there. Those are all those things that you need to pay attention to. So yes, I'm grateful that IG had this event. Fortunately, it was closer to where I live, so that is why I was able to attend the event. But it was also available virtually. Whether IG is going to make that event available online, I don't know. If they do and I see it, I will share it. I will share the link in one of our YouTube videos, or if you follow us on social media, whether it's Facebook, Twitter, or Instagram, we will leave the link there so that you can see what was discussed in that IG Trading Summit. So that's it for today. I've already said a lot. If you have any comments, suggestions, please leave them in the comment sections. We will see you in the next video.